As Tony mentioned, I will share with you an overview of 1911 Gold, our strategic asset in Rice Lake, Manitoba. So just quickly before I move on from this first page, this is a good overview of the infrastructure that's currently in place. Our site is located 3 hours north of Winnipeg, which is part of kind of southern Manitoba. So this is really central, eastern part of Manitoba. This is not a far north, remote area or remote. There's great access to road infrastructure. People nearby, both within Pine Falls, which is a large town an hour away, Kenora, which is to the east, as well as to Winnipeg, which is a rail hub in Canada. So a very large supplier hub throughout the country, and it's nicely positioned. So we've got all this infrastructure you see here on this page. It's all in great condition. We've had some recent announcements about advancing our project, particularly with regaining access to this underground mine, which is right under this head frame you see here off to the left. So it was a big move, a big change for us. We're now almost complete in terms of rehabilitating areas of underground that are a big focus for us. So the next 4 to 5 months are going to be a number of key steps for us as we re-enter and start to drill within that underground mine. So it's an exciting time for 1911 Gold. And obviously, we managed to somehow magically capture the gold price. This was something we started working quite seriously on a couple of years ago. So, when gold was at 2,000, it made a lot of sense. And now with gold at almost 3,400, it just makes infinitely more sense to progress this project and get it back into production with a much larger resource and with a pipeline of growth potential around the property. So as you can guess, there's a number of forward-looking statements in this presentation. All of them are subject to external factors beyond my control. So a lot of caution needs to be obviously taken into account when you are looking at these kinds of projects. However, I feel very confident in most of the statements that we're about to make. What you saw on that previous page was a fully permitted and built infrastructure, 1,300 ton per day mill. It operated up until the end of 2022, so it's been shut down only for a short period of time. It's in excellent condition. We were retreating tailings at site, so we were bringing some gold from historic production, which is how we managed to keep the mill running. You also saw the mine, the fully permitted mine. There's actually 3 underground mines, which Tony mentioned. There's 2 other ramp access mines just off to the northeast of that area you were looking at on the first page. They're within very close proximity, roughly 2 to 3 minutes away by car or by truck, which would be the more realistic picture of what you'd use. And they're great feeder mines. There's also several other mines on the property, some of which are historic producers, and some of them which have just recently been developed over the last 10 years and are ready for additional exploration and production potential. We have a 1.1 million ounce gold resource, largely in that shaft mine under that head frame you saw, but there are ounces in other areas within the mine lease footprint, which we'll look at a little closer in a second. So it is spread out enough that we could probably produce gold from several different areas around the property and to feed the mill. We're currently in the process of drilling into new targets around the mine, which you're going to see shortly. And we're looking to expand that resource over the next 12 months in conjunction with de-risking the mining and bringing this project back into production by early 2027. On top of all of that, this mill and mine infrastructure sits centrally within a very large regional scale land package, roughly 62,000 hectares in total. Road access throughout the property because it's right in the middle of a main dirt road. Something you find in these remote, or not remote, but these far off areas within the province, but really well maintained and good access. Everything's within 25 minutes of the mill infrastructure you saw on that first page. So it's very close. A lot of opportunity to create a real hub and spoke type model within our own property. So we're not stepping outside of our current footprint. This is our current capital structure. You can see we have a nice foundation of large shareholders led by Eric Sprott at 17%. It's based off of 2 recent investments he made in 23 and 2024. We also have 2 corporate mid-tier gold investors in that 12%. And we have 4 institutions in that 16%. One is a London-based fund, and the other 3 are Canadian-based long-term hold funds that participated partially in flow-through as well as in some previous hard dollar financings. So really good foundation, number of high net worth investors as well, about 8 in total, some Canadian, some European, and then insiders own approximately 6%. All of that's been bought on the market or within previous financing. So our average share price is well in line with current shareholders. Between now and the end of the year, we have approximately $3.5 million of cash coming in from warrants, which you see in that right in that kind of third level down here. There's actually now 36 million. I had 1 million exercised yesterday. Too late to update this. But those came in and they are starting to trickle in over the year. So it brings in extra cash. Those expire in December and they're all priced at 10 cents. So pretty much guaranteed it's going to come in as we continue to execute on our current strategy. This is the management team. I've restructured pretty much the entire company. I started off with bringing in Gary O'Connor originally as an advisor. Gary's an experienced CEO and geologist. Really good on the strategy front, as well as very strong in terms of turning around geological properties that he's been involved with historically. After Gary, we brought in Roy Delaware as a new VPX, a lot of experience in resource development under New Gold, working closely with Renaud Adams, and also with Eric Vignette, which is in the bottom right here. Eric's an experienced underground mine engineer with a lot of experience on these narrow vein, high grade underground mines, as well as open pit, which I'm going to make less use of, but very useful in general. Very outside of the box thinker. Between him and McKelly and Gary, we have a very strong technical team. We've built additional personnel underneath them to support. So stepping back, this is where we're located. This is on the Manitoba side of that border, which you can kind of see dotted line right here. It's essentially the western extension of the West Uchi domain, which contains the Red Lake camp. This whole area is defined by this major fault structure, which stretches across and then up here towards the First Mining Springpole project here further out to the east. All the same types of geology, control structures, and rock features that you find on the Red Lake camp is exactly what you find in Rice Lake, with some particular differences, but large similarities in terms of the type of mining you would use on each one of them and how you would follow these down. Typically tend to be steeply dipping northeast structures, underground mines, narrow vein, but continuous for multi-kilometers at depth. So you can, once you find the veins, you tend to mine them for a very long time. This is zooming in a little bit to our property. The key takeaway here really is you can see that road infrastructure cutting through the property, as well as this green hydropower line. Manitoba is known as the second cheapest electricity provider in Canada, second only to Quebec, 5.3 cents per kilowatt hour. So it's a great energy source, low cost, green energy. As well on here, you can see 3 other historic mines down here in the southeastern part of the property. This is really the long-term part of our growth. Our focus is solely on this yellow star right here. But as we step out over the next 2 to 3 years, there's multiple areas here for development and growth potential to double the production of what we see up here at True North. This is just repeating that the infrastructure is intact. 94% historical recoveries at site on the ore that we've already identified and the resource that we currently have. This should be consistent down to that southeastern part of the property. It's very similar rock type, very similar types of veins, that basically the exact same veins as what you find up in that True North side is what you get down there in the central Manitoba area. All the site infrastructure is intact. We have a group right now that's utilizing excess power to mine Bitcoin at our site, generate some incremental revenue to us. And we'll probably continue that. We have over 30 megs of electricity coming to site, and we put in an application to increase our power, partly because I want to electrify as much as possible the underground mine, better working conditions, lower cost, more efficient, but also because it'd be great to have these guys continue on as a partner on site. They've been really handy to have around. And obviously we do have some incremental income coming from them, which offsets our holding costs. This is a a look at our mine lease area here. I'm not going to spend a lot of time, just cognizant of everybody's time here, but the main takeaway here is we've identified the main controlling structures, which are these blue dotted lines. These represent shear structures, and then several favorable host rocks. This brown one here is known as the San Antonio Gabbro. It hosts the main shaft underground mine where you saw that head frame earlier. There's also this shoreline basalt, this green unit here. And wherever these dotted blue lines intersect these host rocks, you have some large deposits, some yet to be discovered, some already discovered. We're drilling off areas where we've known there's mineralization elsewhere where these dotted lines have hit, and we're testing them where they hit this favorable San Antonio Gabbro rock right here. So the two targets you're going to see next are really related to this area here and this area down here. There's also two other host rocks in this blue area. We call it diacetic breccia. It's just a name for a favorable host rock, which is just a porous rock that when the shear veins intersect with it, it tends to trickle out and fill in various voids in the rock and create large deposits. Multiple areas yet to be drilled and discovered. We've got this target down here we didn't get to. There's a lake right here. But we will get there either underground and in the near term or longer term. We'll drill that from the lake in the December, January time. These are the two. First, let's just back up. This is an isometric of the underground. It just means we've kind of pushed everything onto one screen here. These are not all lined up like you see them here, but it's a good representation of the several underground mines. You've got the shaft mine, the two ramp mines, the hinge mine here, and Cohiba mine out here. These are all open at depth. We've got many targets deep down here, which we're going to look to drill now that we've regained access to this large 16 level. But what we've been doing for the last 6 months is drilling off these two key targets here. Call this one the San Antonio West, and this one is the San Antonio Southeast. Both of these have turned out surprisingly well. I mean, obviously, we're hoping for a discovery here, but never too sure, just given this property has been around for a while. But what we found is large gaps within historical drilling, which for some reason, these areas were just not picked off on surface. This one was discovered at depth. This whole 710, 711 zone here is part of our known resource. This actually is the lower extension of this area we've been drilling on surface. So we've got 8 more drill holes coming out on San Antonio Southeast, where we've extended it further at depth. We expect this area to continue down for over 800 meters to intersect with this lower part at the bottom of our mine. So we've created a very large open vein structure here. We also expect the San Antonio West vein to continue down. We've got 7 more coming out on this target, and we expect this also to continue to extend down at depth and follow the same path as the historic San Antonio mine does right here, where you can see the historic workings. We've also got numerous targets underground for extending and infilling the known resource, the known 1.1 million ounce resource. We see potential, without taking into account these new areas, we see the potential to quickly grow the 1.1 to 1.5, 1.6 million within the next 12 months. We would look to probably have an updated MRE out this time next year. But the other big catalyst for us this year is now that we've got mining engineers in-house and we've got Eric Vignette as an advisor, we're putting together an internal scoping of the underground. So building mineable shapes around these areas, putting together the resource within the context of a mine plan. And with that mine plan, we'll look to guide our underground drilling to grow and expand those mineable shapes and create a long-term, a short-term and a long-term mine strategy to put into a preliminary economic assessment towards the end of 2025. So that'll be the next real published item we'll have out there. It won't be with a larger resource, it'll be on the known resource. But what you will see is a very concrete plan, given we've already got all the assets and infrastructure in place. So we're not going to be guessing as to what kind of mill we're going to use, what kind of recovery is going to be in there. We've got all that information already. So it'll be really a solid restart plan. Following that, you're going to get an MRE. Following that, we expect to have a bulk sample done at some point over the next 12 months as well. We expect to actually generate some good revenue from that. And then the logical next step for us is we would continue to drill, but we would look to put out a preliminary feasibility study towards the end of next year. And that's going to be used for the launch back into production. That and the bulk sample. So the bulk sample is going to give us a lot of additional revenue from that, but also give us really good insight into how our mining method is working out. And we're going to test out a few other concepts on that bulk sample as well. Again, it's just another representation showing the lower extensions of all the different resource areas. Everything's completely open at depth. We've got drill holes down here in these lower areas, which are above cutoff grade. We've got this halo of mineralization right here, which is not part of the resource. What's to be the lower extension of the Hinge mine also extends further at depth. So multi-kilometer potential here really within the underground alone. And then longer term, we step back out into the belt. We've got multiple targets down here to the southeast of the property, historic producers. You can see some nice high-grade intercepts here from some of the drilling we've undertaken in the past. These are all wide open at depth and wide open along strike. You've got multi-kilometer structures again, this time on surface, which likely extend pretty far down as well, given that it's very similar in nature and type as to the True North mine. Some of the historical issues are very well known to people that were associated with this property in the past. We've done a lot of research around what went wrong. It's really the fundamentals of underground mining that was the Achilles heel of this operation in 2013 and 14. A low gold price, obviously, too, did not favor mistakes at that time. Not that we're looking to make any mistakes ourselves, but you have a lack of development, lack of delineation drilling, looking ahead to where the veins go, lack of training, really kind of a company that was pressed with its back against the wall and not mining in an efficient and proper manner and just trying to push tons to maximize the number of ounces coming out of the mill. We would obviously not do any of that. We have a number of ideas and concepts, very fundamental mining basics with respect to significant amounts of working faces at any one point in time, ready to go. Top and bottom cuts on all underground mining activities, small patterns for blasting rocks so you're not bringing in a lot of waste. Anyways, there's a number of things we could do quite differently to be much more efficient and mine this asset the way it was meant to be mined and the way it was historically back in the 1930s through to the 1960s, where it was known as one of the highest grade producers.
Sean, sorry to interrupt. Sorry.
Yep.
Because it's time to Q&A. The time is already up.
Sounds good. Yep. We're on the valuation, so I'm happy to take questions instead.
Perfect. Lots of questions to address. First is that, are you looking for any strategic group to work together on these projects?
We've always said we're open to partners, we're open to ideas and concepts. We have the team. We're not lacking right now in terms of technical, but there is always benefits to partnering with other people. And, even I see Gwen's on now, but to the east of us, they're a year, probably 2 years ahead of us. And so there's a lot of benefits to working with others, but right now we're not actively pursuing those opportunities, but we do get approached and,
I see.
Makes sense, we will.
Perfect. Second question is that any cost to maintain the mill?
There is, and that's one of the benefits of the Bitcoin operation we've got there right now. So it brings in around $450,000 of incremental revenue. Without that, our holding costs for the mill, keeping it ready to go and keeping it in condition where it can operate quite quickly would be approximately $900,000 to $1 million annually. So we do have it quite low, but with the benefit of having the crypto, it's now closer to $500,000 annually, which is fairly easy to maintain.
I see. Next question is, what sort of expectations do you have when you go to explore underground?
We expect to be, finding this extends significantly at depth. Some of the drilling, particularly done by Klondike in 2017 towards the end, was hitting very high grades, hitting, the kind of widths that you like to see, particularly as you get deeper. So we do expect this to continue to improve. We also expect to find, multiple stacked ore bodies, which is what we've got in that San Antonio West and San Antonio Southeast. We actually expect to find at least one or two more of those. Obviously, it would be subject to, the grade and width of those areas, but we're confident that we're going to see a growth in the profile, particularly as we step further into the underground.
Great. Last question is that any First Nations relationship investors need to worry about?
nothing to worry about, something to be aware of. I mean, we have really strong community connection with the town of Bissett, obviously. We're partners. We have very good relations with the local Hollow Water and Black River First Nations groups. We've gotten a lot more active now that Manitoba's changed some permitting. You actually need sign off in advance now for certain things. On the mine lease itself, we don't need permission, but we like to make sure everybody's aware of the plans. We've got a workshop happening in early June, meeting with them in a couple of weeks. But so far, yeah, the relationships have been very good, and it's obviously a very large employer in that region.